Happy Monday, everybody. I hope you had a somewhat quiet weekend. Back into the fray we go. It looks like between the schedule of data coming out this week and the unexpected that we've come to expect, we'll have to just see what happens. Today is March 10th, 2025, and this, of course, is your Monday market update. With things a bit more fast and furious, I will keep these videos clear and to the point. We'll review last week's market action, and we're going to preview the week ahead. Keep an eye out for special report if that becomes necessary. Sorry, no fun graphics to go along with that special report, but you'll see it in the email and on LinkedIn. So last Monday, stocks opened higher on positive global economic data and AI sector optimism, but the sentiment quickly reversed as the new tariffs on Canada, Mexico, and China took effect. The ISM manufacturing index came in weaker than expected, fueling concerns of stagflation. Now, remember that line from Jay Powell last year? I'm not seeing the stag or the inflation, but we're going to see if that changes. The mumbling has, but we're just not sure if the data backs that up yet. Later in the day, President Trump confirmed tariff hikes, sparking a broad sell-off. Investors also grew uneasy over reports that the Israel-Hamas war could resume within 10 days if ceasefire negotiations failed. The Dow was down 1.5%, S&P was down 1.75%, the Nasdaq was down a little over 2%. Market was extremely volatile on Tuesday as investors reacted to global retaliation against the new U.S. tariffs. After opening sharply lower, the S&P 500 did hit new year-to-date lows before staging a midday relief rally, following some softer rhetoric from President Trump and news that Ukraine was willing to sign a minerals deal with the United States to help secure peace. Late session profit taking did push stocks back into the red. The Dow was down over 1.5%. S&P was down about 1.25%. The Nasdaq was down 1.2%. Markets bounced back Wednesday on the open after Commerce Secretary Lutnick hinted that tariffs on Canada and Mexico could be scaled back. Remember, we're hearing this a lot, right? Economic data was mixed, but the ISM Services PMI exceeded expectations, helping to ease fears of an economic slowdown. At midday, headlines suggested that tariffs on Mexican and Canadian automobiles would be delayed by 1 month, triggering a rally. Dow was up over 1%, S&P also up over 1%, and the Nasdaq was up just under 1%. Markets opened lower again on Thursday as disappointing earnings from Marvell Technology dragged down big tech stocks like Nvidia, Amazon, Meta. Better than expected jobless claims and productivity data briefly lifted sentiment, but hawkish Fed commentary and confirmation that tariff relief on Canada and Mexico would end April 2nd led to another decline. The Dow was down 1%, S&P down 1.75%, Nasdaq was down 2%. Yes, I know I'm sounding like a broken record on that. After a volatile week, markets closed higher on Friday. The February jobs report showed that the economy added 150,000 new jobs, slightly below expectations, and the unemployment rate did tick up to 4.1%. However, Federal Reserve Chair Jerome Powell's comments about the economy's stability and a wait-and-see approach to interest rates did help to lift investor sentiment. Fed chairs have such a soothing tone, don't you think? Do you remember Greenspan, more recently Yellen, now Powell? It's just like an old grandparent telling you stories to calm you down. Well, we'll see what the markets think. Broadcom's strong earnings did boost tech stocks, while energy stocks rose alongside a 2% increase in oil prices. The Dow closed up 0.5% on the day, S&P up almost 2/3%, and the Nasdaq was up about 0.75%. A good day, but for the week, the Dow was down 2.5%, S&P was down 3%, and the Nasdaq was down 3.5%. So far in 2025, the Nasdaq is down 5.8%, S&P has given up 1.9%. The Dow is up just less than 1%. Before we preview this week, I want to do a quick recap on the ever-moving pieces on this chessboard. On the trade war and U.S. tariffs, March 4th, we saw tariffs on Canada and Mexico at 25% and China at 20%. That went into effect. March 5th, global retaliation began with several countries imposing reciprocal tariffs on U.S. goods. Get used to that term, reciprocal tariffs. Did you ever get into that tag game in close quarters where you kept tagging each other within seconds? Tag, you're it. No, tag, you're it. No, tag, you're it. Back and forth. You get the image? That's what I think we're seeing with that one. March 6th, the U.S. delays tariffs on autos from Mexico and Canada for 1 month after pushback. Of course, March 7th, President Trump confirms auto tariff exemptions will expire on April 2nd, with additional 25% steel and aluminum tariffs set for March 12th. And the China and Europe response. China signaled further retaliation, possibly targeting U.S. agriculture and technology sectors. Europe is considering counter tariffs, especially on agricultural and industrial goods. Geopolitical tensions came in, of course, Ukraine conflict. The U.S. temporarily did pause aid to Ukraine, forcing European nations to increase their military spending. Meanwhile, Ukraine signaled it might sign a minerals deal with the United States. Middle East risks, of course. Reports suggest that the Israel-Hamas war could resume within 10 days, adding geopolitical risk to the market. Quick summary, the trade war uncertainty seems to be the biggest headwind for the markets, with reciprocal tariffs increasing volatility. Eco data is mixed. While ISM services was strong, manufacturing data pointed to stagflation concerns. And then, of course, geopolitical tensions remain elevated, adding further downside risk to the markets. Investors should watch the Fed commentary and further tariff negotiations because that will likely determine the short-term market direction. Now we've covered the work in the rearview mirror. Let's look ahead through the front windshield and see what this coming week looks like. Where the week is light on releases and quantity, I would say it makes up for it in quality and importance. Inflation will be in focus. We will get the New York Fed one-year inflation expectations today. That actually has moved markets last time we got that. We'll get CPI on Wednesday, PPI on Thursday, and we're going to wrap up the inflation data with the University of Michigan survey of 1 and 5 to 10-year inflation expectations on Friday. Consumer sentiment as well. Following the jobs data last week, we're going to get JOLTS tomorrow and the normal high-frequency jobless claims and continuing jobless claims after last week's job data. This will be watched closely, so we'll have to watch that again. One of the smaller ones, but one I think is important, is the National Federation of Independent Businesses, their optimism report. Will they still be optimistic, and for how long? And if you went out and got your Fed bingo board, they're in blackout until March 20, March 19 and 20 is the next meeting. So all of this, and I think the focus will stay on tariffs and what comes next. I still maintain that the growth question is the biggest one to ask. With all that we've discussed, the questions remain. Can we maintain the growth rate later into 2025 and further into 2026? And the key to valuations, which are rich right now, what will the market pay for those earnings in the uncertain times? That's what we'll be watching for you this week. Please stay in touch. Remember, this is still a long game. It does not mean we don't pivot and change when necessary, but we do need to keep our eyes on the goals and how to get there. Please keep in touch with questions. It is still that time to audit your risk levels, and you'll hear this a lot. Make sure you've made your IRA contributions. Have a great week.